Hi, it's Dwyer. Money1776.com, a free site. Gamblersadvisory.com, a free site. It's November 11th, 2022. Let's talk money. But first, remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, we all have different views on money. I've made other videos on money and economics. Some of you have followed me to my boxing videos and will, like yesterday, leave a message for me in the comment section of, hey, Dwyer, inflation or deflation? When's deflation going to happen? And things like that. Let's just talk about some basic concepts. I found that the most important thing to have is a macro view, right? Don't fall for picks. I hope no one watching this video takes anything I say on blind faith, right? You want to know reasons. In other words, you want to figure out what markets are doing well, what markets are positioned to do well, where you can beat the market, right? You want to figure out some of the investment opportunities in that space. In other words, you want to know the why. This is just like sports, right? I know people cringe at that, go ahead and cringe. But if you already know about the Kansas City Chiefs, the fact that they have one of the most successful coaches in recent times, the fact that they have a quarterback who has already won a regular season MVP, has already won a Super Bowl MVP, is one of the elites in the sport. If you understand that the team has a tight end who right now, if he never plays another game, is a Hall of Famer, that the team can put up points in bunches, then if you're in a sports book and suddenly there's a great opportunity to bet on the Chiefs, you're already aware that the Chiefs have the chance to deliver. So you can take advantage of that, right? Whatever the sport, you understand who the players are. It needs to be that way in the economy, right? So have a macro. When you're walking around, understand that there's an energy crisis in Europe especially, right? Figure out where the shortages are. There's a war between the Ukraine and Russia that has killed energy distribution, disrupted supply chains. So let's just throw out ideas, more so than individual stocks in the energy space, right? Some of the entities that I'm interested in, and understand I'm a little different than a Charlie Munger who believes that you're lucky if you could get to 4 plays, right? It's now 2022. I want to take advantage of financial investment vehicles that actually offer me some diversification in the space. So when I mention energy, there are ETFs I'm interested in. The XLE, which has been good to me. XOP, right? There are Goliaths, Exxon, XOM, right? Occidental, OXY, Chevron. I believe that if you're investing in the space and you want to get alpha, you want to beat the market, you understand we're in a bear market. Don't focus on what politicians are telling you. You figure out in a macro sense supply and demand, right? Whether stocks are going up or stocks are going down. You understand we're in a bear market right now. You also understand that there is an inelastic demand. In other words, price insensitive demand. People need energy, whether or not gas is $5 a gallon or $6 a gallon. You understand that there are supply shortages. You understand the energy space is a space where people are necessarily going to have to buy their goods and services, and you want to find a way to get a toe in the water there. So I would look at the ETFs and stocks that I just mentioned, right? Understand too, in a bear market, you don't want to get seduced by small companies with very leveraged balance sheets, right? Rather, you know that Exxon has been a dividend aristocrat, right? They are a Goliath. They're huge. They're not underfinanced. You understand they've been paying dividends to holders for a very long period of time. I understand that's been somewhat diminished recently, but you understand the firm has the financial wherewithal, right? So in a situation where the world has been distracted by solar and wind energy that's not going to replace fossil fuels anytime soon, in a meaningful way, right? You understand that the infrastructure that it takes to build an Exxon, right? To be as diversified, to get the balance sheet of an Exxon, you understand that that's going to be hard to replicate. That's going to take years. There's a moat, to use a Warren Buffett term, around Exxon. In an energy crisis, you understand that that's one place you want to look, right? You also will know that some of these ETF holdings, and you want to look at the holdings of the ETFs, are going to have Exxon in them with Occidental and Chevron, right? So you want to look at those ETFs. Let's talk about other ideas. You're in an area where you're noticing there are a lot of electric vehicles, not just Tesla, but you're getting, other electric vehicles in your area, right? You understand that you can't pick which brand is going to be on top of the hill. It doesn't matter how dazzling the car is. You need to figure out whether, without the subsidies, the company is actually viable, right? You want to look up earnings disappointments, electric vehicles, and see what that Google search turns up, right? You understand that there's a lot you don't know about the space, that there are a lot of smaller EV companies in China, for example, where it's only a matter of time before they hit American shores, right? You also understand that even in the Bay Area, people don't realize that Lucid, which is based in the Bay Area, right, and has significant ties to Dubai, does some things better than Tesla's. Let's say your eyes start bleeding when you start trying to figure out the capabilities of the various car models, right? And yes, those are things you need to look at. But just understand, if it's an EV, it needs a lot more copper than an internal combustion engine does, right? You need to think outside the box rather than try to figure out whether Teslas are truly self-driving, whether Tesla can match Lucid in battery capability, right? The length of a trip that the car can go on a single charge. Maybe what we all need to do is to think about finding a way to invest in copper, to learn about companies like Freeport-McMoRan, right? Maybe what we need to do is to think about investing in silver, right? You understand that silver is a part of solar energy. If you're concerned about solar and wind overtaking fossil fuels, you understand that silver necessarily, which is part of solar panels, would be bullish if, in fact, we could figure out how to increase the market share of renewable energy, right? So, in the silver space, you want to think about companies like First Majestic. The symbol is AG, right? Everyone has their pet silver companies. First Majestic is mine. Let me just also add, too, that First Majestic really is a gold company. So if you're a gold bug, if you're a precious metals person, you understand that when we're talking about the possibility of a Fed pivot, right, you get that if they water down the currency in an effort to favor debtors, limited supply assets like gold, silver, precious metals are going to skyrocket. So, there's a company called Sprott, Sprott, and they have trusts for things like physical gold, silver, right? Sprott does it in a way where you can invest in these precious metals and the holdings are held offshore, outside of the United States. By the way, I am making this video from the United States. It's going to be US centric. If you're in a different country, you want to make sure that you have some precious metals holdings outside of the country. I believe by buying Sprott Physical Gold Trust, Sprott Silver Trust, right? Hell, let's throw in energy. Sprott Uranium Trust, right? You're getting exposure to precious metals in a way that can be audited, that has been audited from a reputable company, and you're getting geographic diversification. Let's talk about what I also think is going to explode right now. I'm not going to talk too much about crypto because I have a paid site for customers, Dwyer 70905 on Substack, right? So I'm going to be fair to my paying customers. But just understand, if you believe, like I do, that Bitcoin is going to explode if there's a Fed pivot that leads to currency debasement, dollar debasement, right? If we get to the later stages of Brent Johnson's dollar milkshake theory, Google it, right? Then I believe that Bitcoin miners are going to take off. So, Hive, Riot, blockchain, right? I believe now in this bear market, you want a piece of those miners. Because, of course, if they pivot while they devalue the dollar, as Bitcoin starts to attract people who are not in love with central bank digital currencies and who want some level of financial privacy, right? I believe Hive and Riot are going to explode, right? Also, right now, you understand that there is something like a 36% discount to net asset value that's going on with the Grayscale Bitcoin Trust. You also understand that if the SEC ever wakes up and decides to start allowing Bitcoin ETFs in the United States, you recognize that the Grayscale Bitcoin Trust is going to convert to a Bitcoin ETF so that you'd be able to lock in, right, the savings. In other words, GBTC is the symbol, is a way to buy Bitcoin right now at a greater than 30% discount. I believe you need to consider that. Let's also talk about a stock that's out of favor And by the way, this is not investment advice. I'm just telling you what I'm considering, what I'm pursuing, what I have pursued. Right? I'm just telling you what's on my mind and what I'm looking at. Right? I've pulled the trigger on some of these plays. I'm just watching some of these plays with the expectation that if things tilt a little bit, I'm going to jump in those waters too. Right? So, just understand. You believe that EVs are taking off. You believe that there is self-driving technology out there. Right? You understand that Waymo, Waymo, is on the cutting edge of autonomous vehicles. Then you realize that Waymo is owned by Google, right? The search engine juggernaut. Maybe you've picked up a Pixel and you realize that Google is making inroads right now in marketing their own cell phones, right? Then, of course, your home and perhaps you're relying on things like Google TV, right? Chromecasts. You realize how easy it is, how convenient it is to use the Google Home app to organize your home entertainment. Maybe you ventured into the world of not just YouTube, but YouTube music. Perhaps you realize that if you go in your car and you say a few words, right? If you have YouTube music on your phone, you can literally say, I'll say I'll just say two words, right? I'm not going to say the actual words because it would trigger my system here, right? You say two words, then you say, play that on YouTube music. You realize that your car can literally, if you have Bluetooth capability in your car, or even if you have an old cassette wiring set up to your phone, that song can start playing on demand. You realize this is more advanced than Amazon's Auto Echo, right? Once you realize what Google's up to, you'll realize you have several product lines, right? Several product lines. I haven't even mentioned Google Cloud. Several product lines, many cutting edge, on a company with an excellent balance sheet that's known. I understand. Right now, the stock's down. That tells me the stock's on sale, right? Think about Amazon. The other day, I was on Amazon Prime watching a Thursday night football game. And I saw they had a little channel, right, for those of us who want stats during the game, right? They have a lot of next gen stats and stuff like that. So I clicked on it. And of course, I'm watching the game. I'm getting statistical information that's not on the main channel, right? You understand that with this company that has something like an 11-year deal with the National Football League, right? 11 years. Think about that. You understand that, oh, yeah, there's also one of the premier retailers in the world behind this company, right? You understand that, you know, Amazon also owns companies like Audible, if you're into narrated books and things like that. Let's just say, and of course, Amazon Web Services, which is a cash cow, right? Don't misinterpret a decrease in the growth rate with losses, right? So Amazon, I understand Amazon's down big, right? They dropped 20% one day recently, right? Folks, again, it's Christmas. Buying a quality stock, right? Amazon is cutting edge in drone technology, folks, for crying out loud. Amazon has an investment in EVs. You need to view Amazon, in my opinion, as an opportunity. So what I'm going to do, since I have a couple of knucklehead step daughters, since I also have a 7-year-old daughter, um, since young people interface with me here online, right? I had to let my gray hair grow out because I realized some folks didn't understand I'm in my 50s, right? Folks thought I was, some 30-year-old. Not that there's anything wrong with being 30, right? I'm not saying there is anything wrong with being 30. But if you're 20 to 30, right? I believe that you need to think for your generation and you. You need to ask yourself the question of what's in it for us because Lord knows there's so much misinformation in the world, right? I want you to look at baby boomers. I want you to look at Gen X, and I want you to realize that those people have been raiding the public treasury. They've been spending your money for years. Just understand, life has recently changed. We are now acknowledging for the first time in years the elephant in the room. In the United States, it's the $31 trillion in acknowledged debt. Now, I have really bad news. The $31 trillion is just the acknowledged debt. If you start looking at the derivatives market, you understand that the real debt level is much bigger than that. How could older generations, right, baby boomers, Gen X, somehow find a way to overspend and borrow money to the point where they spent $31 trillion more than they took in? Right, to the hardcore types out there, what's the interest rate on the 10-year in the United States, the 10-year Treasury? About 4%. Let's do the math, folks. 4% of $31 trillion is more than $1 trillion in debt service. Right? You're kidding yourself if you don't think that the U.S. government has a solvency crisis. They're going to have to start cuts in goods and services and, dare I say, entitlements just to be able to afford the debt service. You understand that? Well, let me just say that the $31 trillion in acknowledged debt, right? The huge debt load that older generations are going to pass on to you in your 20s and 30s, right? Understand that debt has made possible the current housing crisis. Now that debt is being viewed differently because it's caused inflation, right? So now money has become much more expensive. The Federal Reserve, to fight inflation out of necessity, has had to jack up interest rates. So you have mortgage rates now topping 7%. Folks, it wasn't too long ago that a 7% mortgage rate was viewed as normal, right? But in this era where we were binging on debt, we were binging on low interest rates, right? In this era, it's traumatic. It's threatening to crash the housing market, right? Understand too, businesses are now fighting for investment dollars. It used to be that if you were a saver, you were rewarded. You could get 4% on a 10-year treasury bond, right? My parents weren't into stocks. They were immigrants to the United States. But back then, just a couple of decades ago, maybe 3 decades ago, you could actually get 5% on a certificate of deposit. Understand, 4% on a 10-year isn't that much, right? Investment is driven by savings. Savers should be rewarded. We're just figuring out now that the 10-year period we went through where savers weren't rewarded, where they were in fact punished with negative interest rates. Think about that crazy idea. We're now realizing that that was not only lunacy, but that that was unsustainable. So if I can get 4% on a 10-year backed by the good faith and credit of the United States government, why would I invest in your company that carries much higher risks and that can't deliver that 4% guarantee? Right, folks, understand. The higher the rates, the more companies are going to fold. So, you're in your 20s, people are talking about a Fed pivot. Older people, right? Baby boomers, Gen X, they're talking about a Fed pivot. They're saying, oh, these higher rates are causing so much misery. So much misery. Higher mortgage rates, harder time paying your mortgage, that we need to return things to the way they were. Now, I need for younger people to think generationally. Right, folks? You understand that even with all the rate hikes that have happened, interest rates haven't even reached the inflation rate. You understand that. The folks who are crying about 4% aren't being blunt and saying, well, that still isn't greater than the inflation rate. That still isn't enough to get inflation under control. How could it be? You're still losing some of the value of your dollars. Right? So here's what I want young people to consider. What's best for you? Right? Old people with gray hair are telling you about we need a Fed pivot and stuff like that. Is that what's in your best interest? And the answer is no. Right? You understand the stakes involved. Folks, the answer is no. You're either going to raise the price of capital above the inflation rate to beat inflation and to pop the everything bubble, making houses affordable again, making gas affordable again, making fixed income sovereign debt buying worthwhile again, making pensions, which need a 7% rate of return, often to pay beneficiaries, more able to meet their obligations again. Right? You're either going to do that or you're going to pivot to support the status quo, to debase the dollar, crash the dollar. If the pivot takes place, housing would remain unaffordable on the coast for people without a sports level signing bonus or an inheritance. Right? A pivot where Powell comes out and says, hey, we're not raising rates anymore. We're dovish, they call it. Right? We're just going to let things be. No more rate hiking intervention. That would save the status quo. Wealthier people with hard assets and real estate at the expense of creditors, including pension fund beneficiaries who would be paid back with watered down, less valuable fiat currency. Right? Understand, if there's a pivot and you crash the dollar, really the only games in town long term, in my opinion, would be gold, which has survived for centuries, folks. Right? Understand, gold is a limited supply with no counterparty risk if you're in possession of the gold you hold. Gold, Bitcoin, right? Again, self possession, limited supply. Precious metals, right? Silver, copper, limited supply assets, right? Understand, if you water down the US currency, if you pivot, if you allow inflation to be elevated in the United States up over 8%, just understand bondholders will be punished in favor of equity holders that own zombie companies kept alive by the constant refinancing of their debts. Right? So just, if you leave this video with one thought, make it this one. Inflation is regressive. It hurts wage earners. Understand, U.S. wage growth has been depressed, right? It hurts the working class. It hurts the poor, right? Inflation is regressive. If you have a pivot and decide to debase the currency and to stop hiking rates, and I applaud Powell on hiking rates, then the $1 million homes in your neighborhood, your middle class neighborhood, the $1 million homes that already are unaffordable to people in their 20s and 30s, that are already going for sales prices well above what your parents paid for such real estate. Those homes will become worth $2 million. Understand, if 1 million is unattainable, the 2 million is even more unattainable for people in their 20s and 30s. So understand, your interests as a Generation Z person might be different than the interests of baby boomers. Right? Fight the pivot. You don't want to pivot. Understand, some very savvy people, Jesse Felder, Google him, are saying that the paradigm might have changed and we might be in a high inflationary era, right? We're just coming out of a multi-decade low inflationary era, right? My point to you is, in the United States of America, we can't punish savers, right? I understand the government's going to have higher debt carrying costs. I get it. But understand here, given that we're the world's reserve currency, it's not in our best interest to debase the dollar, right? You want healthy interest rates here in the United States. You want to reward savers. You want pension funds to be able to generate a 4, 5, 6, 7% rate of return just off the bond market. The bond market is bigger than the stock market. You want a healthy bond market. You don't want Alan Greenspan's 0% rates, right? No, capital needs a cost so that we avoid malinvestment, right? Folks, in nature, even forests need forest fires from time to time to burn out the dead wood, right? Capital needs to be moved away from zombie companies who can't support themselves without cheap credit toward real companies that can actually generate a rate of return greater than the interest being paid on the 10-year. That's how I see it. Let me hear from you. I hope you leave your comments in the comment section of this YouTube video. Again, you can find some other financial stories at money1776.com. I also run always1776.com on Substack if you're into crypto. And understand, I believe crypto is going to thrive. Look me up at Dwyer 70905.substack.com. Thanks for stopping by.